receiving. Let's hope it's the stream that I see. I do see the stream, and I also see Ken. Fantastic. Noted for the future. Sorry about that. Should disappear in a minute. But note that you are still on camera. We are 10 seconds to Ken, 10 to Ken. Have a good show.
Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, February 10th. My name is Ken Shreve. On today's show, we'll take a look at some AI fears once again weighing on some stocks in the financial sector today. Another record high for the Dow Jones Industrial Average today. Lots of earnings reports to take a look at after the close. Before we get into all of that, let me bring in our news editor, Ed Carson, who's got 3 stocks to watch for today. Good afternoon, Ed.
Good afternoon. I want to take a look at American Healthcare, Charles Schwab, and Nvidia.
American Healthcare, Charles Schwab, and Nvidia. Sounds good. Well, before we do that, let's take a look at the major stock indexes here. And looks like we had a little close near lows for the NASDAQ and the S&P 500 today. So let's start by taking a look at the NASDAQ composite here. See where we closed here. It looks like the NASDAQ was down 0.6% or so. So see where it finally settled out here. NASDAQ composite. Looks like we might have had a little bit of higher volume too. We've seen some clustering of distribution days on the NASDAQ composite, just below its 50-day moving average. So NASDAQ down 0.6%. S&P 500 also a little bit of selling into the close here, not as big a percentage decline. S&P 500, that looks like it's down about 0.4%. Selling in the Dow Jones Industrial Average, mentioned at least on an intraday basis, hit an intraday high. It did close near its low, holding just above that 50,000 level. Then the Russell 2000, not much action in the Russell today. That did reverse slightly lower, down about 0.2% on the day. So breadth today, Ed, on the NASDAQ composite, just slightly negative, but positive again on the NYSE today. We had that RSP looking very strong, another new high for RSP today. We had the S&P 500 lower today, but RSP up 0.3%. So seeing strong breadth on the NYSE, much better on than the NASDAQ lately. But after 2 days of gains, NASDAQ pulled back a little bit, still challenged here a little bit below the 50-day moving average.
Yeah, still a little bit mixed, and that's sort of been the pattern, especially for the NASDAQ. I mean, the NASDAQ has really gone sideways, since October. The other indexes have had slight to solid gains over time, but it has been a couple of days up or 4 days up or 5 days up and then rolling over. So it makes it tough. It makes it tough to make a big aggressive moves on anything. Is you need to be nimble. You maybe take smaller positions, and if you're going to do it quickly in a bounce. But also be ready to pull back. I mean, you don't have to do a whole lot. If you were to say, you know what, I'm going to let my winners sort of hold up, and as long as they don't do anything damaging, I'm going to hold them and not do a lot. Well, then the gyrations don't really matter too much. It's just a little tricky when you don't have that real decisive trend. I mean, it's hard to say today is meaningful, but then again, it's hard to say that the prior couple of days, how meaningful are they? You know what I mean? Especially for the NASDAQ. But the Dow is looking strong. RSP is looking strong. So there's definitely things working. I think the fact that you definitely need to look at how the indexes and the breadth and all that is going and think, well, how should my portfolio be? At the very least, you should have a substantial amount of NYSE type stocks. I mean, as this to be clear, I mean, it doesn't mean, yes, there are some techs that are working. Yes, there you can do that. Yes, you can have some long-term winners, but you can't just beat your head over and say, I'm going to jump in and buy a bunch of AI names that are high beta names. That has not been a strategy that has been for low stress in the last few months.
Yeah, I mentioned another all-time high, even though the Dow Jones did give back some gains today, another all-time high for blue chips today. Another index we don't look at too much, but we know small caps have been outperforming. Check out MDY. This is the mid-cap 400. Look at the outperformance for the mid-cap 400, up near all-time highs as well. And then the NYSE Composite, another broad-based index we don't look at very much, but just look at the incredible relative strength of the NYSE Composite Index. So underneath the surface, I mean, just seeing some selling, undercurrents of selling in the technology sector, but the broad-based market still showing a lot of strength out there. Mentioned RSP again. That is just reflective of the underlying strong breadth that we're seeing on the New York Stock Exchange. And we do have another chart that we look at here. Don't look at it much on the SMT video, but this is a chart that looks at the advanced decline line for the New York Stock Exchange. And you can see the advanced decline line compared to the 10-day moving average shooting into new high ground right here, and you compare that to the Nasdaq's advanced decline line, and it's a totally different picture. See a downtrend here and an uptrend for the NYSE. So just an entirely different picture. A couple of ETFs outperformed today, Ed. XHB seeing some Homebuilder strength. Look at this move for XHB lately. What's going on with the Homebuilders?
Yeah, there was some positive news about maybe some kind of so-called Trump homes. I'm still not quite sure exactly what that was, but that helped last week. And treasury yields are coming down. I mean, let's be clear, they've fallen for a number
Yes.
of days. If you look at 0TNX, that is a big deal. It's not just that it's fallen, it's now fallen clearly back into a sort of a prior range that it was at. It was starting to look like it was going to move out. And all of a sudden, last several days, pretty solid declines. That feeds into lower mortgage rates, the 10-year into the 30-year. So more important than even the Fed in many ways, getting this to come down. There were some weak retail sales numbers, some other data that sort of linked to inflation that was a little cool. But for whatever reason, yeah, I think that's a big factor. A lot of housing related names doing well.
Yeah, and maybe not surprisingly, I was looking at CME FedWatch earlier today, and the odds of a rate cut have really come in quite a bit. I was looking in June, about a 75% chance that the next quarter point cut is going to be at the June meeting. That is a little bit earlier than what I was seeing before. I don't know if you've been kind of keeping track of that, but at least today, 75% chance that the next quarter point cut is going to be at the June meeting, and that's fluid. But maybe with this this precipitous drop in the 10-year yield, maybe the odds of a rate cut have been moved up quite a bit. I don't know.
In the April meeting, now it's almost getting to be a 50-50. It's now a 43% chance of
in April?
of a rate cut of a rate cut in late April. Just a week ago, it was like 77% chance that there would be no cut. So
yeah.
Obviously we're going to have so many earnings reports even between now and April, let alone June. But yeah, that is a shift, and that is something that's probably helping a lot of things, especially a lot of NYSE stocks.
Yeah. And then we did see a lot of action in the financial sector today. Let's check in on XLF. This is the very liquid, popular ETF. It was down 0.76% on the day, but we did see a lot of selling in the investment bank broker group. We'll take a look at Charles Schwab in just a little bit, but boy, just seeing names like Ameriprise, AMP, RJF, some really violent selling in some of these names. We'll get to that in just a little bit. But the investment bank brokers group, you can see Raymond James down sharply. But we'll get to that when we talk about Charles Schwab in just a little bit. But why don't we start by taking a look at some individual stocks here, and we can start by taking a look at AHR, American Healthcare REIT. Maybe not a bad idea to have some defensive names in the portfolio. Real estate investment trust. This is a pretty nice setup here. AHR setting up in a nice base here, up for several days in a row, kind of flirting with a breakout here.
Yeah, nice action here. you probably could have bought it the last few days, because when it went above the 50-day line decisively, it was getting above some short-term highs. But even now, it's not that far away from the 50-day line. So at this point, you might say, I'm going to wait for the breakout, because it's really not too far from there, or wait to see that. But that's a nice move there. The volume hasn't been tremendous the last few days, but it's made a nice run. The earnings growth has been strong. I mean, it's sort of been shifting into profitability after there was a couple of weak quarters. Should be solid growth through next year. I mean, so again, is this going to have the most amazing, this is probably not going to be the S&P 500's leader, say, but solid performance, 2% dividend yield. There's, it's paused after a nice run. So you can see how that, just a nice pause after some nice action here. Yeah, I mean, I think a portfolio could definitely be looking at this. David Ryan brought this up, and yeah, I think that investors should be looking a lot of this area. Look, there's a lot more. This owns a lot of real estate properties where healthcare facilities are on. They're not doing the healthcare facilities themselves, but there's a growing senior population, a growing population of 75 plus. A lot of need for this. I mean, when you look at job report, which we'll get tomorrow morning, almost all the job growth in the private sector has been basically healthcare, and a lot of it's because we're an aging population. I mean, this is so there's fundamental reasons why there'll be a tailwind to this whole sector for quite a while.
No doubt, demographics definitely working in this company's favor here. Look at the big increases in mutual fund ownership in this company as well. 541 funds had a position at the end of the first quarter. That number had jumped all the way to 746 at the end of the fourth quarter last year. You see revenue growth expected to accelerate this year. So lots of good signs here. And then you mentioned that nifty dividend yield of 1.99, basically 2%. So you're getting nice price appreciation here, good fundamentals, good technicals. So nice combination here for American Healthcare REIT. Okay, well, let's take a look at SCHW, because we mentioned weakness in this brokers investment bank group, and Charles Schwab was not immune. Bad break for Schwab today, below the 50-day. It was down 7.4%. So what exactly was the news here, Ed?
Yeah, I mean, there was some startup, from Altruist, released a new AI-powered tax software, and it just spooking people. At this point, we're seeing more and more. Yes, software's been slammed. We saw the travel sites slammed. We've seen some data providers slammed. And it's just sort of like this fundamental kind of things like, man, maybe a lot of these businesses will be changed. And maybe this is way overdone and it'll all be turned around. But we saw this from big losses, and a lot of them, like Schwab. I mean, Schwab was, a little extended, or you could argue it was just above a little shelf. It was actionable, as of yesterday, looked really good. And bam, I mean, it's just tumbling down today. And, through the buy point, through the 50-day line, it's hard to deal with that sort of thing. And that's just going to spook things, because the fundamentals have been pretty good. A lot of things have been working well for Schwab, but yeah, I mean, this stuff comes in, and is there going to be a fundamental rethink, or will it be back and forth? Will there be this kind of, no, it's great, and then no, it's not? Everybody's sort of back and forth for a while. It may be a while before we know. And to think that, oh no, this will shrug it off. Think about how software was. I mean, software, oh yeah, it'll bounce back, and it bounced back a little bit, and then, then just keep on selling for quite a while. So, for those who didn't sell, I mean, it's sort of like, well, you're going to maybe wait until tomorrow. You can see if it can bounce back, but you might even want to think about, depending on when we got it, if you want to take some partial profits, or partly cutting your position if this can't really power above the 50-day line tomorrow, because it's you don't know where this is going to go, how this will shake up in the next. I mean, it's not this next quarter, it's what's going to happen a year, 2 years, 3 years from now.
Yeah, here was a breakout from a long flat base here, and you can see this one-day move. It basically came down and just came down right to the top of this base, this 99.59 pivot. It closed at 99.25, so it basically retraced this entire gain in one day. And it wasn't just online brokers. I mentioned the Ameriprise's LPLA was LPL Financial. Look at the decline in LPL today. That stock was down 8% in the group. Ameriprise also in the group, a very sharp decline. And then RJF, so broad-based selling in the investment banking group as a result of this new AI tool. And like you said, it has spread into various industries. It started in software, and then we had a lot of selling and a lot of these data providers, Moody's, MCO. Look at the damage that's been done to Moody's and some of the other stocks in the commercial service market research group. So we'll
Yeah, I do
see
want to
we'll
bring
see
up
what
JP
impact
Morgan and Wells Fargo and some of those
Sure.
names. They fell a little bit. I mean, they have wealth management is a huge business for these companies. I
Yeah.
mean, again, this was modest. That's okay. But just pointing out is that could be a tailwind. Wells Fargo is a little bit more. They both sort of came down to test their 50-day line today, but they were making some positive moves, and it's just something to note that this may not be as big of a deal. They have so much more else going on, but if that's a drag for them, yeah, a lot of these other names could come under too. I mean, there's other things. Goldman Sachs a little different, and the narrowing yield spread
Sure.
was probably something that hit some of the banks today. But just wanted to bring out that this could hit a lot of financials as well.
Absolutely. All right. Well, let's take a look at Nvidia, because Nvidia not far away from reporting earnings, just 15 calendar days away, and it is sitting right above its moving averages here in a kind of a lengthy consolidation, just kind of biding time, kind of wait and see here. Another strong earnings report expected, kind of biding time here ahead of our earnings. What do you see here in Nvidia, Ed?
This is just so much to watch. I think in 2 weeks, if it can power above the short-term highs, I think that'd be actionable. I mean, I think yesterday there was a trend line buy, and I think maybe Leaderboard took advantage of that to add a little bit more because there was something. But at this point, given that it sort of dipped back below, I would say, oh, let's get above these short-term highs. The 193, 194 area, and if it could pause for a few days, and there might be time that you could get a move. But definitely know that earnings can go a lot of ways, and sometimes the earnings can go great and then it reverses lower. There's definitely been a trend there, but this is still such a huge deal. And what they have to say about their upcoming chip, their next one, Rubin, and other things. I mean, the growth is, look at that, accelerated. Yeah, that it accelerated in the last quarter. Just still huge growth. On a forward basis, it's not that expensive of a stock. I mean, I know we don't talk about it very much, but honestly, after this enormous growth, there's still so much to go, and it's still supposed to be strong for the next couple of years. And obviously, you never know when that might end, or there's competition or so on. But yeah, this is definitely one to watch because it's held up for it showed a little bit. I don't want to go over too board, but while a lot of AI infrastructure names had some real volatile action in the last few weeks, I mean, there's some big nasty sell-offs. Nvidia wasn't great. I don't want to be, it's not like, that was fun, but it wasn't as violent. And so I just think that, with so much volatility in some of these high beta names, if you still felt like playing in that AI hardware space, if this one makes a little bit more of a move, this one, on a relative basis is a little safer because that growth is so strong for the short run. It doesn't seem like it'll be disrupted in the near term. So look, always got to keep an eye on Nvidia. I'm not really breaking any molds by saying, hey, maybe you should take a look at Nvidia.
Exactly. It's pretty incredible. Nvidia just is still churning out the growth that it does, because it is still it's going against some difficult comparisons, and yet you still look at the results for the January ended quarter. I mean, they're still going to be churning out 62% growth, and this is supposedly against some difficult comparisons. And then for the April quarter, July quarter, I mean, they are still growing like gangbusters. So it's very, very impressive growth. And we took a little nibble yesterday, just a little 2.5% position, and we'll see. But we're still big believers in Nvidia's growth story, and earnings not far away. And of course, it's going to be an important earnings report for the market, no doubt about it. Well, we still have quite a few earnings reports to take a look at after the close. Where do you want to start, Ed?
Let's look at
several to look
Robinhood. Mixed results. I think Bitcoin's
Okay.
weakness might be hitting crypto trading. I haven't really looked at the details. This is not having a good reaction. I mean, it's like,
Okay.
so that's not that, but that was already struggling. Astera Labs. People really love Astera Labs because it's made a couple of big moves. Well, it's also made some pretty big declines as well. That's a Labs pattern. It beat views. It was initially up. It's right around where you could say it's actionable, but selling off now. I mean, who knows where this will go. Cloudflare, ticker net.
Yep.
That one's making a nice move, but it's also beaten down. Can it get back above some moving averages? It's probably, I'm not sure where it is exactly, but it's probably needs some more, like to get above 200 probably, but interesting area there. Advanced Energy Industries, AEIS, that's making a solid move on earnings. That was sort of near the top of a fairly messy consolidation, and above a prior base, like an LSCC, Lattice Semiconductor, very similar, sort of at the top of a messy 2 or 3 week pause above a prior base. That one also doing very well. And Gilead, that one was down 5%. So, and there's a lot more. There's a lot of other things out there. So don't get me wrong, but those are some of the bigger names out there, still very active.
Very active, very active. And then, yeah, I'm looking tomorrow morning. We've got McDonald's before the open, and then a big one tomorrow night that we're all going to be watching in the data center cooling space. Vertiv, VRT, kind of floating right at the top of a buy zone here. We're going to hear from Vertiv tomorrow night. So still pretty busy on the earnings front. So always fun looking at these earnings
Actually,
reports.
it's reporting
And
before the open.
We'll be
it's actually Vertiv is before the open.
Thank you very much. Yeah, and I have that here, Vertiv before the open. So we'll be talking about Vertiv tomorrow, and I'll be handling the headlines for IBD Live, and I'll be hosting tomorrow morning as well. So I'll be covering that. So please join us. Ed, thanks very much for your insight. We appreciate it.
Thanks, Ken.
All right. And yeah, like I said, I'll be hosting IBD Live in the morning, so be sure to join us. Just go to investors.com/IBD Live to check out what we're doing every morning. And yeah, I'll be doing the headlines as we get going, and be going over a bunch of earnings reports. In the meantime, thanks for joining us today. Ed and I will be back tomorrow for another edition of Stock Market Today. In the meantime, have a great afternoon, everybody. We'll see you back here tomorrow. Take care. Bye-bye.
Hold for 5 seconds. 4, 3, 2, 1. Thank you, Ken. Hiding you. You are now hidden. Showing disclaimer. Disclaimer is now being shown.